before we do get into my talk, I'd like to just mention that I'm offering a 1-month free subscription to anyone who attends here virtually or in person here. Just send a request, just send an email to me at questionsfortaylor@gmail.com, questionsfortaylor@gmail.com, and in the subject line just put free subscription, and we'll make sure that you at least get 1 month. That's 4 weekly issues and 1 monthly issue, and it's delivered on my Substack page. So, all right, so we're obviously at a point in history when some major changes are taking place geopolitically, domestically, politically, and a lot of economic changes are going to be heading our way as a result of some of these geopolitical issues. I think that the chart that I have in front of you there shows the gold price, and in my way of thinking, it pretty much tracks the American empire's decline. And that isn't obvious to most people, but clearly when the purchasing power is the inverse of that chart, the dollar's purchasing power, it's a problem for any country, but especially for a world leader. And so I think there are changes underway that, to no small part, are related to that. J.P. Morgan said in 1912, gold is money, everything else is credit. And we've forgotten that message, obviously. That gold is money, that it retains its value, is clear if you look at the price of gold, price of oil in ounces of gold. It hasn't changed. This chart goes back to the 1950s. What did change was the definition of a dollar. Of course, that was, during Roosevelt's time, that was changed domestically, but internationally, the dollar was still backed by gold at $35 an ounce. And when the United States decided that it wanted to expand its empire in Vietnam and begin more social programs in America, it had to pay for it, so it started going into debt. It started printing money. And France, especially France, but other European countries said, well, we really don't trust your dollar. We would like real money. We would like gold. So under the Bretton Woods Agreement, they were entitled at $35 to send their greenbacks here in exchange for the real thing, for gold. But Nixon didn't like to see the gold disappearing from the U.S. coffers, and so he slammed the gold window shut, and we went into a floating rate exchange system in 1971. And from that time on, you can see the volatility in the price of oil after we went off the gold standard, after we went off the international gold standard. 1973 then, to make sure that the dollar would retain its value since it didn't have anything backing it any longer, the Nixon administration went off to Saudi Arabia and worked to deal with the Saudis to protect the family and power there. In exchange, we required them to sell all their oil, that OPEC would sell all its oil denominated in gold, and that put a bid under the dollar, obviously, because all the nations that had to import oil had to find dollars. So there was an insatiable demand for dollars that underpinned the world's, allowed us to continue being the world's reserve currency. But it brings cost. If you have the world's reserve currency, you have to make sure that you run deficits, trade deficits. And so we ran this trade from 1971 on. You can see the result, growing chronic trade deficits. That ensured that there was plenty of dollar liquidity sloshing around the globe so that we could have the world's reserve currency, and that so we could also print more dollars so that we could expand our empire, expand our in Vietnam and beyond, and we have to this day continued on with that. But to do this, we really had to get rid of the jobs, the industries that really create wealth. I would say mining and manufacturing, obviously. Obviously technology increases wealth, wealth as well, but in terms of creating jobs, middle-class jobs, which were disappearing during this time frame, it really started to exact some social costs on Americans, especially the middle class and lower classes. You see here that with productivity gains up until about the time that we went off the gold standard, the workers, the wage earners kept up with the productivity gains. And so we had a very egalitarian a very egalitarian society at that time, wealth-wise, until after 1971. That's when we started seeing a tremendous redistribution of wealth to the top 1%. This slide is somewhat outdated. This shows income, the income distribution, as you can see, back in 1979, pretty evenly divided in terms of the total amount of wealth that went to these different groups. So you had the top 1%, top 1/10 of 1%, and the other groups pretty much the same in terms of the total size of the pie went into those different groups. But as time went on, when we started printing money, those industries, those people that were most closely attached to government spending started to do very well. And of course, we were offshoring our major, our industry, the wealth-creating industries, to a very great extent. And so that's why we, why we started seeing this distribution income. As far as wealth goes, this is 2024. That slide there with income is sort of dated. It goes to 2011, I think. So 2024, right now, the top 1/10 of 1% of the population is 22.13 trillion. The bottom 50% has 3.89 trillion. So the top 10% in 2024 wealth, 58.33 trillion. So you see the income distribution has really become probably more skewed to the top than any time since the Roaring '20s. And this, I believe, this is my belief, is the reason we have Donald Trump as the president. The middle class, the lower middle class, the working class, not the college educated very much, but more the working class people that are struggling really hard, elected this man. So Trump's pro-trade, pro-growth economic policies, what he really wants to do is reshore manufacturing, and I think he's going to really try to encourage mining, manufacturing, certainly very much pro-technology as well, but you're probably pretty well aware of his policies, tariffs, tax incentives, sort of a general reduction of taxes for the middle and lower classes, reduce wasteful government expenditures, which DOGE is digging into and finding some pretty remarkable discoveries there in terms of where our money is going as a country. Reduce regulation, there be reduced regulation, I have no doubts about that. The last time Trump was in, I heard it said in Nevada that the permitting time was pretty much cut in half when he was in, and I expect the same thing to take place again. So I think that very much a pro-technology administration. Now the MAGA, what I call the MAGA Republican philosophy is pretty similar to the previous GOP, the previous Republican philosophy of smaller government, more freedom, individuals being able to do what they're gifted to do, and so on and so forth. But I think the difference here is that this administration is against this expansion, military expansion around the globe that has been such a part of the American, especially since 1971 after World War II when we went off the gold standard. Definitely Trump is an energy guy, and it was pretty interesting when the Treasury Secretary was being interviewed, or for his confirmation, Mr. Bissett. Senator Wyden was trying to get him to commit to the green energy program that the Biden administration had, and he said, "Senator Wyden, we are not in a clean energy race," as Senator Wyden said, we're in a clean energy race, and he said, "No, it's not a clean energy race. We're in an energy race." And this year, that the Chinese will build 100 coal-powered plants, 10 nuclear plants. That's not solar, he said. I'm in favor of nuclear. And so I think you're going to see the Trump administration very pro-nuclear. It's not to say that they're against clean energy. I don't think they are at all, but I think it's going to have to make economic sense. I think that they're not going to want to be subsidizing things the way the Democrat administrations have done. One of my favorites, and I follow this in my newsletter, is Oklo Inc. And a lot of the AI guys were concerned about having enough energy to run their computers. And so Sam Altman and some other well-known people are behind this Oklo Inc. They're not up and running yet, but they're working very fast towards that end. And one of the main things here is that they have the technology now to use the spent fuel, to recycle the spent fuel. So that takes away a major environmental concern about this industry. And then another company I'm following, Bloom Energy, uses clean energy. These are sort of localized systems. We have an aging power grid in the United States, so to fix that up would cost huge amounts of money. So some people are starting to take it into their own hands and starting to set up these local energy centers. And so Bloom Energy is a profitable company, doing quite well now. Actually, it's in my letter as well. So they'll integrate solar, wind, biogas, and they have natural gas going into the system too as needed, so that they always have it available. And then they have solid oxide fuel cells that they're using as part of the system as well. But I think technology is very, very important, and I'm really pleased to have Hydrograph here, and Christine Brower will be giving her presentation, let her tell you all about it. But if anybody that knows anything about graphene knows that that the properties are remarkable, and if you really understand those properties, it's not too hard to imagine that it's going to be a really big deal. And Hydrograph, I think, has the inside track on producing pure, really high-quality graphene, and Kirsten will tell you about that. But I think this has implications for clean energy as well as a whole lot of other things, and lowering costs. She'll explain some of that to you in her talk. But I think this is the kind of thing that the Trump administration wants to see grow in the United States. But our big problem is debt. Again, credit. It's not money. Gold is money. Everything else is credit. The other side of that is debt. You can go on the internet and see this real time. These numbers just click away like mad, just furiously spiraling higher. And the problem now is that our interest on our debt is higher than our defense spending. So, as Matthew Peipenberg has said, when a nation's interest expense exceeds its military budget, that nation is ipso facto in open decline. And I think the Trump administration understands this. This is why they are gearing back and changing things to a certain extent. So it's the debt trap. I mean, that's the interest expense there. It's going straight up. And it's going to get higher, as John Kaiser explained yesterday. It's going to get higher. There's still a lot of low-priced debt on the books yet. And the interest rates are not going to go down. Trump may try to talk them down or force the Fed to push them down, I don't know. But the natural force is because of the enormous amount of money that the U.S. is borrowing, and the interest on it. It's going to kill us. I mean, we look at the staggering pace of the new debt. I mean, it's just not a stable system. And then there's the unfunded part that we don't even hear very much about, and it's much larger. So it's a big problem. Now, we were okay. We could live this way for quite a while as long as the rest of the world were recycling their dollars to buy our treasuries. But that hit a peak in the 2008 financial crisis. And now these countries, especially in 2014, when there was a covert ouster of the elected Ukrainian government by our CIA, countries that started to form the BRICS started to buy gold, and they reduced their treasury buying. And then after we issued sanctions on Russia, all those countries said, we've had enough of the dollar. We're not going to, several of those countries anyway, China for sure. And Russia and other countries said, well, if the United States can do this to us, they might do it to them, they might do it to us. And so that was an inflection point, I think a very important inflection point. So there's this movement towards away from credit to money, to real money. And the BRICS started doing this. They started saying, we think the United States is abusing us, and we're sick of it, and we're going to try to protect our own autonomy, our own nation's interest. And so those were the five, and there's 5 more countries that have joined. There's a bunch more countries that are trying to join. I think that Saudi Arabia is kind of, they not in yet, but they were wanting to be during the Biden administration, which they didn't get along too well with the Biden administration, which was always more pro-Iran, it seems. So anyway, these people, the BRICS were started, and they are a major competitor now. So they're not holding dollars, they're starting their own trading system. When we shut them out of the international trading system, the international system for moving money around, then they had to do something to protect themselves. So that's the BRICS. Again, I think the Trump administration has a more realistic understanding of what the global forces are than the prior administration. And Marco Rubio, right after he was confirmed to the Senate, did this interview with Megyn Kelly, and basically he was saying that he didn't use the word mercantilist, but that's really what it is. We need to learn to live and to work with people, different power centers around the globe. And mercantilism, of course, was what has always been the thing. Every nation tries to do what it can do in its best interest, and of course, we've been told that that's not a good system, but I think we're going back to it, whether it's good or bad. It is what it is. And one of the issues, of course, I think that's of importance to miners are the critical metals that China has cornered the market on, and various raw materials, and not just in the metals, but probably in the pharmaceuticals and areas like that as well. I think this is really important to keep an eye. A lot of projects, several projects that I'm following, companies have some critical metal, and sometimes it's economically important, sometimes it's not, but it can be important in terms of getting permitting and getting permits, getting things moving faster. Governments would be more supportive if they know there's a critical metal that can be had that way. So as far as the gold miners go, gold mining shares just have not kept up with the gold price to any great extent. Still very much lagging, but we are starting to see some very nice increases in profits for some of the big producers. Barrick Gold recently put out its numbers, and they're looking very good, very, very solid, big, strong cash flows. This is a chart that shows the free cash flows of the GDX companies and showing the discount. And there's, as you can see, a tremendous discount compared to the free cash flows that are coming in from these GDX mining companies. So there's a lot of catch up to do for the gold miners in this. I think it should, unless you don't believe that gold is going to stay where it is, I think it's probably going a lot higher unless you make the case that somehow Trump will get control of the budget and won't have to keep printing money, but I wouldn't bet on that. So we've had this phenomenon of, the ETFs, whenever people put their money into an ETF, they're buying, and those are weighted indexes. They just tend to buy the ones that are expensive. They keep getting more and more expensive. So the Magnificent Seven, such a large percentage of GDP, is 60-some%, equal to 60-some% of GDP, going into the Magnificent Seven. It's been where all the money is going, it seems. And not much of it is going to the mining companies, that's for sure. But I think the party may be coming to an end. I'm sad to say. I really do believe the Trump administration might have some pretty tough years, a couple of tough years ahead of it. I do believe, now the Atlanta Fed just put out this yesterday or the day before, is now predicting a recession, a negative growth for this quarter of 1.5%. And they were up over 2% positive until now. Perhaps the layoffs that are coming from the government, if you pay somebody in the government to dig holes and fill them back in, that counts as GDP, right? So if you're laying a bunch of people off in the government, maybe we see a plunge in the GDP, which was probably going to impact the economy negatively. One sure sign that we're getting close to the end of a bull market is when all the little guys are getting in. And I sort of keep track of the insiders, and from what I've seen for quite a while now is that insiders have been major net sellers of their shares. So that suggests that we're probably pretty close to a recession. So, most of the time people figured, well, you could go to T-bonds. When the shares go down, you just go to T-bonds. But that's not working anymore. I do believe that if we go into if we have a bear market in equities, you're going to see the treasuries rally and probably do better for a while. But it's probably not going to last unless you buy the idea that Trump can get a handle on inflation and all the rest of it. I mentioned, I think we're at a major turning point, an inflection point in many ways. If any of you have read The Fourth Turning, you might have thought along these lines as well. This, in 1998, it was written, and they were suggesting that the next fourth turning would come somewhere in the mid-2000s. And I believe that the real big changes started to occur with the 2008 financial crisis, and the election of Obama were major changes for America that have really started a lot of conflicts in the country, and we're going through the resolution of those conflicts right now in a major way, and we're seeing it revealed in the news every day. But one thing I am optimistic about, I'm optimistic that some of our most important people are starting to learn the virtues of capitalism again. And I say that in part, well, this is from Ayn Rand, the philosopher. Have you read Atlas Shrugged and other books that she's written? The late Ayn Rand, talked about a businessman cannot force you to buy his product. If he makes a mistake, he suffers the consequences. If he fails, he takes the loss. A bureaucrat forces you to weigh his decisions, whether you agree with them or not. If he makes a mistake, you suffer the consequences. If he fails, he passes the loss on to you in the form of heavier taxes. That's Ayn Rand, and I think words of wisdom. And I think if you're honest, you'll look at the situation, you'll look at what's been transpiring and realize that at least some of that is true. But where I'm encouraged is the words of Jeff Bezos, a head owner of the Washington Post, who's really opening it up to freedom of the press and really wanting to have diverse ideas expressed at the Washington Post, which has been pretty far left-leaning, I would say military, industrial complex, sympathetic. And he's, just to read what Jeff Bezos wrote just the other day, tweeted the other day, "I am of America and for America, and proud to be so. Our country did not get here by being typical. And a big part of America's success has been freedom in the economic realm and everywhere else. Freedom is ethical. It minimizes coercion and practical. It drives creativity, invention, and prosperity." So for Jeff Bezos to say that is really, to me, very encouraging as a person who believes in capitalism, believes in freedom, believes that freedom of expression, the First Amendment as an American. If we lose the First Amendment, we lose the Western world, in my view. It's something very dark. If you can't have doctors, during COVID, we had experiences where some of America's best doctors were not allowed to talk about what they believed to be true about COVID and about the treatment of COVID, including Dr. Malone, who was one of the inventors of mRNA, who was very worried about the repercussions of COVID. So it reminds me so much of the days of the Soviet Union, and I'm 78 years old, so I read the Wall Street Journal during the days of the Soviet Union. Whenever any scientific discovery went against the government, what the government wanted, it shut it down. And I'm afraid if that happens here, the future is not very bright. But when I see people like Jeff Bezos opining as he did, and not only Jeff Bezos, but many other very wealthy people that had been in Silicon Valley, had been pretty much on the left side of the political spectrum, as even Musk. So I think there's reasons to be hopeful. And I think for this sector, for what we're doing here, the mining companies and the technology companies, the days are very bright. I think there's going to be a lot of incentives for mining and manufacturing.